Man. So we love, I don't even know what I'm saying. What was I saying? I don't know. We want to buy. It's time to buy. Okay. So I'm going into it. Shakira, I'll talk. I'm probably gonna end up calling you after this because my welcome and all of this stuff now and get to know me. But so what is the stock market? It's think about like a flea market or a grocery market, right? We call them grocery stores, but they're grocery markets. It's just a place where you can go and buy a variety of things. So the stock market is a place where we can go and buy a variety of companies. We can buy all type of companies. And some of those companies, you know how like a 401k, you buy into your 401k and they're giving you like this package with a whole bunch of different shares in it that are good companies, so they say. So we can buy little baskets like that on the market too. They're called ETFs or index funds. And sometimes it's the smartest thing to do to buy the whole basket because then you don't really have to do a bunch of research. You just need to research that one basket that you're buying. And we like that. So it is a difference between investing and trading. So when we're investing, it's something that we're looking, like when we say we're investing in our future, we about to put in some work on whatever it is that we're doing, whatever should be passive income, whatever it is that you're doing, so that because we know that it's going to pay off in the future. So investing is like something that's slow and steady that we do because we know it's gonna be beneficial for us down the road. A trade, when you're trading is, I mean, it's in the word, right? It's just a trade. It's a quick trade. So when I go to Walmart, that is considered, that's a transaction. That's a trade, right? I can take stuff off the shelves and in return, I give them cash in and out, quick exchange, right? They had the supply I needed. I had the money they wanted. Quick exchange. So that's trading. So a share, we can buy or sell a share of a company, a piece of a company, or we can buy it to hold it because we think that this company is going to be good, it's going to be around, it's going to be around for a long time. Now, trading, the more that we trade, the more we're risking losing our money because it is a gamble. But I always think of like trading in the stock market like, hey, Josh. I always think of trading in the stock market like being like kind of like Ocean's 11 when you're a full-time trader. It's like you, George Clooney and all them, right? You going in, because what they say at the casino, the house always wins. Same thing on the stock market. The big money always wins. So it's kind of, but like when you watch like the Ocean's 11 movie, they go in there, they have a plan. And because I still can't believe somebody really tried me on the trading journal aspect of being a trader, I'm gonna say it again. When I watch Ocean's 11, they planned that out and they wrote it down. They had what you call them things where you look at it on a piece of paper and it gives you like the layout of the building you're in. What's that called, y'all? Y'all know what's it called? Somebody know. What word am I trying to use? Like they, like a floor plan or whatever you want to, whatever blueprints. Thank you, Alfred. Yes, they had or Mr. Alfred, I'm sorry, but they had like a blueprints, right? It wasn't, they didn't just keep it in their head and say, okay, when we get in here, we need to make sure that, hey, make sure that you turn your head at that. No, they wrote it down. They formulated a plan, they wrote it down. And when they got in there, did they have to think on their feet? Yeah, but at least they had a foundation set to be some thieves. Right. And that's what we're doing. So it's kind of like, it's like counting cards. Being Ocean 11's counting cards when you're trading. But at the end of the day, it's still gambling. It's inside information. You're trying to, you're doing a little bit more, you're paying attention, you're being analytical, but it's still a gamble and the house will always win. So the more that you trade, the more you're risking not actually creating wealth, right? Because 6 figures is not wealth. That ain't even rich. Not now, right? You know what's crazy is I was I think it was, I'm pretty sure it was in Forbes, but I was reading this article where it was saying that in 2024, right? Like last year, 2023, where the economy was with interest rates and how the dollar was dropping and all of this stuff. In 2023, a judge, the salary of a sitting judge was considered upper middle class. a surgeon's salary was considered upper middle class. 100K ain't shit anymore. Unfortunately, it's just not. And so again, if we have 100K in our trading account and we just keep trading, you're gonna lose. You're gonna lose. It's just the odds. You're gonna lose. But if we're investing, all we have to do is put the work in really once. Research this company, analyze it, decide when's a good time to buy and sit on it. Right? Trades, the price goes up and down. Right? Like this week, Apple, this isn't exact, I'm just throwing a number out there, but this week when Apple opened up, the share price, the price of the company, Apple, was like I'm just gonna say $195. Again, it's not right, but Apple ended up dropping this week because they got some bad news. The company got some bad news. So at the end of the week today, Apple was $180, like a $10 drop. Again, it's not completely accurate, but y'all stick with me. It's like a $10 drop. If I'm trading, that $10 drop is gonna hurt, especially if I was trading it saying that the price was gonna rise, but it ended up dropping $10. That's like on a day-to-day, week-to-week type of basis when we're trading. We're looking at like, what's the price doing right now? Overall, Apple is the wealthiest company in the world as of right now. And the reason I'm saying as of right now is because reports are coming out that Microsoft, I think, is like 50 million away or $100 million away from being worth more than Apple. And I'm gonna pause right here and just throw these shots. I told y'all asses to buy Microsoft last year. However, they're on track to, now Microsoft is about to become the largest company in the world. So when I look at, but that doesn't mean that Apple's gonna go to the pits of hell, right? It's still a great company. So in here, I like to go by 1 and 2, put a 1 in the chat for yes, a 2 in the chat for no. Catherine, you just don't know how many people you saved by telling me to unlock the Zoom, because I see them trickling in. But so we got the, so put a 1 for yes and a 2 for no. So who has an iPhone, iPad, Apple Watch, MacBook, any of those? She said, y'all welcome, for real, because I had locked it. But so who has any Apple product, Apple device? Put a 1 for yes, 2 for no. So just because Apple dropped this week, right? Not one of y'all have put a 2. Okay, Joe Cat, weirdo. Barely any of y'all. 1 out of the, I guess, what, 10 of y'all answered, even though 17 y'all on here, okay? But only 1. So where is Apple gonna go anytime soon? Just because you dropped $10 this week, but it's been the wealthiest company in the world for 10 years, why would I sell my investment, right? It just took a little dip. What goes up must come down. What goes down gonna come right back up. So investing is really kind of like, I don't want to say a one-time thing because we gotta look at it. But so we got the bulls and the bears, okay? So, because we're gonna be hearing terms bullish and bearish and things in here. So bulls, where those terms came from, how they like used it is bulls when they attack, their horns, they push their head down, right? And their prey, they lift it up by their horns and throw it up. That's how they attack. Bear, so if a market is bullish, the price is going up. This is how bulls attack. They bend down and lift up. A bear, when they attack, they're on their hind legs, on their back legs, but then they have to come down to their prey. They come down. So a bearish market, the price is dropping of the market, right? Bullish go up. Green is go, red is down. So let's look at, because what we're here to talk about is market dips, because we are not in a bull market anymore. In 2022, we were absolutely in a bull market, or I mean, in a bear market. I'm sorry. We are not in a bear market anymore. We were getting laid out. Y'all funny. We were in a bear market. The price was dropping and your butt should have been buying. But that's okay. We back up at the top now, but there's still opportunities. It doesn't mean that you stop buying. Unfortunately, you just didn't capitalize on your opportunity to buy when it was lower. So here, what I'm looking at is SPY. So SPY is one of those baskets we were talking about where it just puts a whole bunch of companies inside of it. So SPY has 500 different companies inside of it. It's a basket. I'm gonna use the word, I'm gonna stop saying basket now. It's an ETF, an electronically traded fund, aka basket. So if we're looking at this, this gives us a good representation of the whole market. This is the basket worth buying. So the time frame that I have it on, you can see right here on my chart, the 1W stands for the weekly, right? So where I put these flags at right here, you can see where it dipped. These were bear markets that happened, right? We had a bear drop in 2008, 2011, 2018, 2020, 2022. What happened in the economy in 2008?
Housing market.
Period. So since I let the others in now, we'll use the chat, Shakira, but I'm still gonna call you after because thanks for being on time. So what happened in the economy in 2011? A little bit on, yeah. Well, I'll take that. What happened in the economy in 2018? Who was in office? Who was the president in 2018? Girl, what? Trump. I wish. Trump. Who was Trump buddy with? Who was Trump friendly enemies with and when he was in office?
Was it the intensifying war between trade war between USA and China?
There you go. There's the trade war between not Putin, not when he was in office. It wasn't Putin. He wasn't friendly enemies with Putin. He was friendly with Putin. With China, yes, the trade war, right? Y'all already know what's popping off in 2020. What happened? Oh, hey, Brittany, 22 minutes late. What happened in 2020? You already,
COVID.
yeah. So
COVID.
we're gonna use the chat. Good job though, but we'll stick to the chat. COVID, period. And what happened in the economy in 2022? What happened in the world economy in 2022? Let's go. No, you good, you good. You just remember I got people from off social media in the class too. You good, but good job, Josh. War. Where was the war at, y'all? Where is the war at? Somebody said everywhere, period. Now I forgot one good dip right here. Between 2000 and 2003. When do y'all think the real dip really happened? Between 2000 and 2003, what was going on? What happened between the year 2000 and 2003? Iraq war, that's the Iraq war, that's right, dot-com bubble in 2000 period, but what happened in 2001? In 2001? It's because of the Iraq war. The Iraq war was the effect, 9/11. There you go. All right. Now look at that. We got a common theme here. Seems like whenever a global war pops off, the market dips. Anybody remember 1 for yes, 2 for no? Anybody ever heard the phrase, war is good for the economy? Anybody noticing how after every time that a war pops off, we dip and then take the frick off? Defense stocks do well every time. La 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 la, y'all are piecing the pieces together. Wait, y'all put it to you. Oh, y'all never heard that? Yeah, war is good for the economy. Because everybody gotta go to war, gotta go to work when we're in war. So think about like when you watch like old movies about like World War I or World War II, right? You always see that it's like everybody's working, right? Because then in the early 1900s, right, women didn't really work, they were housewives. But when Dub Dub 1 and Dub Dub 2 was going on, everybody was nurses, or you're in factories sewing for soldiers, or you're doing this, right? War is good for the economy because everybody getting up and going to work. And statistically, I'll even kind of go down this rabbit hole a little bit. Statistically, nah, I ain't gonna go there. Okay. So one other thing that I want to point out. There are only 2 times where we're looking at this chart. And remember, this is a great representation of the entire market, and it's going all the way back to 1994. Only what I could see, what I could pull up, right? 1994. Because we can't even see the 1987 crash, right? Not on this screenshot I took, but 94 to 2024, that's 20 years. Is that right? 2004, 30 years. There we go. 30 years of information that we're looking at. In 30 years, there has only been 2 times that when the market pulled back, it made a lower low. In the grand scheme of things, there is only 2 times in the history. And again, we're only looking at 30 years of history that the market has made a lower low. And that was here, because see, this was a low it made right here, around in here. After 9/11, right? Remember, war is good for the economy. That was a 20-year war, all right? But anyway, so this dip right here, this went a little bit lower into that 2008 housing crisis, because that had never happened, right? That had never happened. Wars happen all the time. That had never happened. It went lower. But then look how much it gained before it even thought about dipping again. Again, yeah, kind of like a little bit in 2011, there was a little bit of a recession, as much as you can say a little bit right here, but look how long it took off and how much it gained from that. The second time it ever made a lower low was right here. And this was one day. And I've just studied these charts so much more than I just know, right? Like this was one day that it stayed down here. Other than that, it was creating equal lows. I remember this and us being, because it stayed there for like a week creating equal lows. And I just remember everybody just on social media and all the chats and stuff just being like, oh, it's about to double bottom. We finna double bottom. And then like 2 days later, it just whoop, and bounced right back up same day. And that was that. And look how much that took off. And this was the 2020 COVID drop, the pandemic drop, right? And it makes sense that this dropped because what sort of issues did we have in 2000 and like during COVID? What sort of issues did we have? We had supply and demand issues, right? We couldn't get any supplies from overseas. We had supply and demand issues. We was running out of supply over here because the borders were closed. You had employment issues. People weren't working. Then we started getting the stimmy and people just didn't want to work. And then the economy really switched because these businesses started figuring out, wait, the overhead is too much. Like, y'all can stay home, that's fine. Now I don't have to pay the overhead to have a physical building for you to come to. You know what I'm saying? So, and then we have this dip, didn't even come down. Like, right? We have always pretty much created higher dips, AKA higher lows. So imagine being I'm in mixed company, so I'm trying to think of the adjective I want to use. Imagine being in. If y'all saw the brand new, and just stick with me on the analogy, okay? And or the hypothetical scenario here. Let's say that we're all obsessed with the Cadillac Escalade. Is it a Cadillac Escalade? Is it Escalade a Cadillac? Whatever. Let's say we're all obsessed with the Escalade. And the 2024 just came out. It's gorgeous, fully loaded. It's everything we need. Black on peanut butter. You know what I'm saying? It's all of that. It's everything we need. I don't know how much that is. We'll say that's like a $80,000 car. I don't know. But let's say for whatever reason, all of a sudden, the Escalade, the brand new Escalade, this beautiful car that we love. And I don't know if it's a good car manufacturer. I don't know. We just gonna say it is, right? It's one of the best manufacturers out there. All of a sudden, it's marked down 50% off. Are you gonna buy the beautiful dream car for 50% off? That wasn't a rhetorical question. Would you buy your dream car for 50% off? And so we as a people are so quick to do that. Or women, right? If we love, if you like designer and you see that Gucci, maybe on a regular day, I don't do name brand really, but let's say maybe on a regular day, or hell, I'll even say some Jordans, right? Which are too damn expensive at this point. But let's say it's some J's and they dropping them on the sneakers app and the Nike app and they're 50% off. I'm running and I'm gonna buy multiple. Because I love them. But they depreciate in value as soon as they ship it to me. Right? Because even if I don't wear them and I return it, I'm still losing money because I got to pay for the shipping and send it back. It's depreciating. Yet we're so quick to say we can't afford to invest. It's not the right time to invest. Meanwhile, last year the market dropped damn near basically, we could pretty much just say about 60%. And feel good to say a majority of y'all didn't take advantage. That's not very intelligent. Imagine watching SPY up here, which is the greatest representation of the market we have. Imagine seeing it drop from all-time high. And we understand that all it's doing is taking a little dip. We understand that, right? And it gets all the way down here to 320. And you understand that it's going to get back to where it was. And then, oh my God, look right here, keep going. And you don't take advantage of that. In less than a year, you would have made your money back and some. So think about it and do better next market dip. But that's what we're going to learn. Next market dip, but we're going to learn how to buy the dips here in this bull market. So what are some characteristics we have for a bull market? Okay, listen, y'all gonna get the recording and all that. And just, again, I'm mostly speaking to my mentees in here, I think is my audience. But rising asset prices. So asset is just a security. It's a synonym for a stock. You know what I'm saying? Hey, LaTanya. So we have the characteristics of a bull market is the price gonna go up. Duh. Okay, we're gonna have positive economic news. We're gonna see a lot of trading in the market. Okay, we're gonna see a lot of trading going on. People getting in and out, buying these shares and all of that stuff. Hell, at the top of the year, you're also gonna see a lot of trading in the market just because somebody told me that just stuck with me. In January, the market and the gyms are packed, right? So something to look at. Positive news. I don't know, just technical indicators, just anything positive, right? Now, what GDP is you see this here under the positive economic indicators. GDP is gross domestic product. GDP is important, y'all. Basically, that's how much money did America spend month to month. The more money America is spending, technically, as they tell us, the better we're doing. The less we're spending, the worse we're doing. When people aren't, when people are working, low unemployment rates, right? As we were saying, war is good for the economy. Why? Because people gotta go to work. You gotta think about how many people get sent overseas, right? How many people, but we could just take it there. So the people that's leaving, somebody gotta stand up and take their job. So things like that. You want to look at those are great indicators, especially like when the market is in a dip, when it is in a bear market, aka, right? And for it to be considered a bear market officially, it needs to be at a minimum 20% off, marked off of the most recent high, all-time high. That's when it's officially a bear market. And to me, it's officially a bull market once you cross those previous highs. That's how I look at it. Yeah, so you want to like look at these type of things like when we are in a bear market, because it can give us an indication of, ooh, I really need to be buying right here. So what we hear all the time is buy low, sell high. We want to buy it low so that we can turn around and sell it when it's higher. So some bear market characteristics is we're just going to see that everything we just talked about, right? We're going to start seeing people take profit. So when people take profit, meaning like they sell their shares, their investments, the price is going to lower. And the reason why the price is going to lower because they're seeing that nobody, so let's talk about Apple. We'll say that Apple reaches $300. Now all of a sudden it starts to drop a nice healthy amount. Maybe we say it starts at one, it's down about like $30. It's profit taking because it got too high. No one is going to want to buy Apple when it's 300, kind of, right? No one wants to buy Apple when it was $300 or at $300 when they sit and they realize that a year ago it was $150. So you kind of start seeing buyers when it gets up there, right? So what has to happen is the price has to lower. It has to go on sale in order to find buyers who will come in, and then the more we buy, the higher the price goes, right? The less we're buying, the lower the price goes. Negative news, war, housing crises, things like that, right? So let's get into it now. Y'all, it is so easy to make $100,000. I promise you, it's easy to make $100,000. It's easy. And somebody told me once, you only need to make 10,000 10 times to make 100,000 lit. It is very hard to keep $100,000. It's hard. 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 You have to have good risk management to be able to do it. So the name of this game is to preserve our capital. Okay, so Apple is a great investment until the iPhone start blowing up in people's hands. So as investors, yeah, it really is kind of like, it really is simple. I personally feel like people make it much harder than it has to be because I spelled adaptability wrong. Because you don't have to be in 50 different stocks, invested in 50 different stocks to make money. You really don't at all, at all. That's doing too much. Matter of fact, that's doing way too much. You need to have like discipline and emotional control, but that's more on the trading side. But as far as investing, you need to have discipline. And the discipline to me comes more so from keeping up with that company. You can't just buy Apple and then walk away. So who put a 1 if you're invested, if you own a share of Apple? Put a 1 if you own a share of Apple. All right. What news came out about Apple this week? Downgraded twice. Okay, good job. Did anyone, so and this no shade, I'm not saying this, we're collecting data so we can see, right? So for the ones who did put 1, but y'all didn't respond about the downgrade, it's no shame, right? Put a 2 if you did not know that Apple was downgraded. If you own a share of Apple and you did not know that it got downgraded, put a 2. That's not very smart of us to not have our eyes on the news of the company that we own. If you own a car, you would never leave the car in the Walmart parking lot and just walk away. And be like, Walmart, this is a public parking lot, it'll be okay. You'd never do that. So why would you do it with your investment? That's huge news that Apple was downgraded twice. As Ms. Eva just said, 1, we know that Apple is around for a long time, not a good time. We already talked about bad news will make the price drop. But in the grand scheme of things, that's just a day-to-day, week-to-week basis. In the grand scheme of things, this is a great company that we want to buy. Now, imagine if you don't have your eye on the news of this company that you're invested in, you missed the fact that Apple was downgraded 2 times in 1 week, and you missed an opportunity to buy those shares of Apple at a discounted price. All right. So diversification is important to your risk management too. So during a bear market, do you think technology, like when the economy is not doing good, do you think technology companies, do you think their share price is going to go up or go down? Right? Because if the economy isn't doing well, iPhones is really kind of the last thing that we're looking at buying. If the economy isn't doing well, with the share price of Walmart, theoretically, would we expect it to go up or down? Exactly. If the not necessarily a toss-up, so I shouldn't have hesitated when I asked it and said theoretically, we would expect for it to go up because it's a discount store. We're not shopping at Publix when the economy ain't good and grocery prices are going up. We're at Walmart with it. One more. I think y'all feel my point on that. So during a bear market, if all you have in your portfolio is Apple, Microsoft, Google, and it's a bear market, you really just kind of fucked yourself mentally. Them the first things that's gonna drop, and they're gonna drop hard, quick, fast, heavy, big. They're gonna drop. Psychologically, you're gonna look at your portfolio and you're gonna get scared. It's just facts. You're gonna get scared and you're gonna think you need to sell. Meanwhile, you just sold at a loss. And you need to be able to, I think the adaptability has to do with your mentality as well, because we're programmed to think when money is leaving our account, that like we need to preserve what's in there, when meanwhile you need to understand that that's an opportunity. Put more, get a second job if you need to, do whatever you got to do, put more in there, because I bet you within a year you're gonna be looking like, I might have been tired these last, it's usually like 9 months or so. I might be tired these last 9 months. I might have been working these extra shifts. I might have been Ubering. I might have been babysitting, doing hair, cutting hair. But I bet you in about like 12 months or so after that, you're gonna be sitting looking pretty. So I've been in 3 bear markets, and the year after, like when it's on the rise and like the market's like gone back to previous all-time high and then kept going, that's my off year. I don't do too much because I don't have to. I did all the work during the bear market, right? So, and then on the technical side of it, there's things that we can look at as well, like moving averages, okay? on higher time frames. So if we're looking at our moving average, like the 200 MA, I don't care about the 200 MA on the 5-minute. What that 200 MA is doing on the monthly tells me when is a good time to buy and when's a good time to sell, or the 50, right? It's like a higher one. Period. Trend lines. So if I'm looking to buy at lows, if it touched my would I buy when it touched the resistance trend line or when it touched the support trend line? Support, period, because support marks the lows, it's supporting us from falling even further, and resistance marks the highs, it's resisting the price from going even higher. So that's a good way to do it. And then listen, I'm not Wall Street Trapper, love him to death, I ain't him. I'm not finna sit here and pour over financial metrics and income statements and all of that, because I don't need to find brand new companies every year. I just need to find a good company that ain't going nowhere no time soon, been around, gonna stay around, and invest in it, or invest in the basket, make it easy. So when we're looking at the difference between technical and fundamental analysis is something, technical analysis is when we're looking at the charts. So when we're looking at like the charts like this, right, we're doing technical analysis. When I pull up the news and I'm reading like the financial metrics and all of the things like that, this is fundamental. Fundamental analysis is knowing that one of my biggest investments in my portfolio, my godkids portfolio, my IRA, all of that is Apple. It is absolutely freaking important for me to know that they got downgraded twice. It's time to put money in it. It's time to load up. And we won't go through those. So like some of the ratios that like you can look at when you're doing it is looking at, and y'all will have this on the recording again, not really my style, but you can go through reading like the PB ratio, the PE ratio, free cash flow. You just want to basically, what I tell people is you want to look at that financial report, and what you want to compare is, and you just want to ask yourself, are they increasing or decreasing? And you might be like, well, are they increasing or decreasing what? Boom, let's go. Before y'all decided, I love to ask this question. Before y'all decided that, yes, it was worth it to take this class tonight, right? What did you need to see from me? Before you was like, never seen this person, this woman, before a day in my life. Only see her on Instagram washing her face. What was it that you needed to see in this company before you invested in a class? Can y'all hear me? Somebody just told me they can't hear me. Oh, okay. Results, consistency, relatability, facts and results, that I'm a real person, genuine, right? We want to look at the company's knowledge. We want to look at the same companies the same way. Y'all also proof. There we go. Somebody said it. I was gonna say, somebody be real. Somebody be real. Somebody be real. If y'all didn't know, I'm just be real. If y'all didn't know that I had it like that, would you be in this class and trust me to teach you how to get it like that? Fuck no. Hell no, y'all wouldn't be here, right? That's just being honest. If y'all didn't know I had it like that, y'all wouldn't trust me to come in here and be like that, right? So you wanted to see that I was increasing my revenue. You wanted to see that I'm consistently posting reels saying, boom, we woke up and made this before y'all woke up. Boom, we woke up and did this. Boom, look at this trade that we took. You wanted to see consistency in there. You wanted to know that the company, that the head of the CEO of the company wasn't a crackhead, right? Wasn't a thief. You wanted to see stuff like that. Are they able to keep employees, right? So, and this, they're not my employees, they're my brothers and sisters, but y'all know what I'm saying, like the analyst in the Discord. Do people come around me and stay around me? Or am I steady having a turnover rate with my company, right? You're looking at the same damn thing on these companies. Are they increasing or decreasing revenue? If they're steadily increasing revenue for the past 10 years, oh shit. If they've been decreasing revenue for the past 6 years, maybe I don't really like them like that. What about their debt? Are they in debt? If I was in debt, Scott, shut up. I don't want to play. Get out. If I was increasing debt, then in this case, we could use the analogy. If I was steady losing trades, y'all wouldn't be here, right? So just think about it like that way. That makes sense to y'all? When you're looking at these financial ratios, are they increasing or decreasing? You gonna know if you want the numbers to be increasing or decreasing. Do we want to look at the debt year over year for the past 5 years and see that it increased? Fuck no, we're gonna stay away from that company. Am I right? Or am I talking to myself? I hate talking to myself. I'll hang up real quick, y'all. So let me see. Let me look at this list and I want to see because the only people responding are my mentees. So now what I'm gonna do, I love my mentees because y'all's hunger is what keeps me going. So now my mentees don't respond anymore. And for the people who paid for this class for the information, y'all want to make sure that you're getting something more back from your investment. I need to hear from y'all. Okay, so my mentees, y'all don't answer, and if they don't step up, we're gonna breeze through this and end it. Because the way that I could look at it, right, and we're gonna go economics is, it was $20. What loss am I taking if y'all ask for a refund? The loss that I'm taking is my time. So there's different ways we can break a company down or into two categories. We got value versus growth companies. All right. So and it's in the name. A value company is something that's like it's valued, it's been around. So I'm gonna give y'all one example of a value company. What's the oldest drink company that we know of? What's the oldest drink company we know of? Coca-Cola, period. KO is a value company. All right. What is one of the newer electronic companies that you know? Electronic or damn, I really kind of gave it to y'all when I meant to say technology. I said electronic vehicle that you know. What's a new electronic vehicle that's just the company is just taking over? Tesla, there we go. Miss Sandra, love you. I appreciate you. Alfred, love you, appreciate you. Y'all showing up. Monica, I might put y'all on hold and get the other ones to speak up too, but y'all good for now. And Miss Alicia, love that in y'all. I like hunger. Hunger motivates me to give more. But so yeah, that is an example of a growth company. It's newer. It's newer. And the thing is because it is so new and it is so innovative, theoretically, hypothetically, we could say we really don't know if EVs are gonna be around that long. They will, we know that, but we really don't know that. It's something brand new. Tesla was the first ones, right? No, you good. I'm not talking about, but I made it, period. Yeah, I saw your email and then I wrote it down on my list to I had wrote it on my list to make sure I sent you the recording right after the class. So a value company, when do we want, it's a mature company, meaning it's just been around, gonna stay around, right? My favorite value company is Clorox in this moment. Clorox. Y'all know y'all use them. Everybody use Clorox products, right? I hope, yeah, but y'all know what I'm saying. Trust me, all the brands that Clorox owns, trust me. You clean in your house, you got a Clorox product in there. Well, I figured you would. Yeah, dang it. Well, no, you can't hardly find Clorox, but let's take a little rabbit hole real quick. Yeah. I should have said brands. I do apologize. I should not have said companies. What brands does Clorox? Clorox is the company that has multiple brands. Why? Why does one company need to have multiple brands? Diversity, exactly. So Clorox owns Burt's Bees, Formula 409, Glad, Hidden Valley Ranch. That throws me off every time. Now that's some diversity for you guys right there. Cleaning products and then Hidden Valley Ranch. Okay. Kingsford, the charcoal, right? Kitchen Bouquet. So they make kitchen materials too. KC Masterpiece, Liquid Plumber, Brita, Mistolin, Pine Sol, Poet, Greenworks, Soy, and on and on and on and on and on and on and on. They even have an orange juice brand. So again, I say, I promise you, because this is not even it. I'm just not going to click on it. I promise you, you own, if you clean your house, you own a product that you own a brand that Clorox owns. And another thing is, well, we won't even go down there. I'll kind of say this for the ones that know. So how Johnson & Johnson separated their products, like the baby killing products, and made Kenvue. Clorox separated what wasn't good with them and made Procter & Gamble. Fun fact. Little fun facts. Okay. They pay out dividends. A mature company, if it's been around long enough, they have the money to be able to pay out dividends. And so it's just something, it's just a little thank you. Now, it ain't gonna be a whole lot now, but it's something, it's passive income. You're gonna pay me just for owning it. I love that, right? We love that. And most of the time, these companies are gonna be in these categories, like a financial company. So we could think, what's the oldest bank in the world? JP Morgan, good job. JP Morgan, it's in the financial sector. It is absolutely a value company. It's a great company, and JP Morgan got upgraded twice in the last few weeks, and it keeps creating all-time highs. So go get y'all's money on that swing trade. Wait for the pullback, get your money on the swing trade. The industrial, so this is where we're going to see like railroads and companies like that. Energy, where we'll see oil. Consumer staples, that'll be companies like Clorox, Procter & Gamble, Walmart. Like those are companies that are in there, right? A growth company is expected to eventually outperform the market. Sounds like Tesla. It doesn't pay dividends because at the moment they're trying to grow, right? Like when I have a good month with Wall Street Ben Black, when I have a good month, or I'll put it like this, when I have a good year, I can afford to host $20 classes. Feel me? It's dividends, basically. Moving on up towards a value company, period. Not a growth company anymore. Okay. So normally it's gonna dominate like technology because they're always reinventing the wheel with technology, right? So or technology related, because I'll say it like that, because Tesla is not in the technology sector, but it's technology related, right? It can't run without all the stuff that goes into the technology sector. And then consumer discretionary, which is going to be, we'll look at that in a minute. Can't even think, I just blanked. So 1 for value company, 2 for growth company. Which one would you be most interested in investing in? A value company or a growth company? If you had to choose. And I can see why. Different strokes for different folks, right? Now, when y'all was saying 2 for both, absolutely, right? Diversity, but I can absolutely, some people are value investors, right? They don't want to do that much work, and how I came in talking, I'm honestly really a value investor. Where the hell is Clorox gonna go? Nowhere. Here's my money, take it. right? Tesla, Elon gets to tweeting and pisses me off. You're not cemented yet. That's not the word I want to use, not cemented, but you're not like it's not a stable company yet. However, it is innovative. It is extraordinarily innovative. It like he invented Tesla and changed the auto manufacturer industry, changed the whole game for cars, right? Hell, it's to the point where laws are changing. California got the law where you damn near you can't even buy, they're about to do it where you can't even buy gas operated vehicles anymore. You got companies like, Charger and Challenger came out at the top of last year and said, yeah, we're not even finna manufacture any more Chargers or Challengers. Why? Because they're not finna spend money on something when they can see where the future is headed, right? They're not going to keep manufacturing and putting money out on that. Instead, they're going to start doing their trials to make the cars and stuff. You know what I'm saying? They're gonna put the money over there, right? So it depends, but that's where the research goes into it. Both, but if I wanted slow and steady value, but if I wanted to take a chance and hopefully get it at the lowest growth because at greater risk, which is a greater payoff. Not necessarily, because companies can open and go on the market, aka Tesla. Tesla went on the open market and it ended up eventually going below the price. So let's say that when Tesla, the first day that we could trade Tesla on the market, it was worth $100. It probably shot up to like $300, but yeah, maybe a few months later, it dropped down to like $80, right? It went below the low of like the first day, because it is brand spanking new. And it's an IPO, but it's like it's brand spanking new. We don't know shit about this company. Right. So it won't always necessarily work out like that. Then you have to remember the whole theme of this is buy them at dips, buy good companies at dips, because it's gonna go back up and keep going. How do we know it's gonna keep going if it's a great company? Because great companies continue to reinvent themselves and stay ahead of their competition. Just like we saw when we're looking at SPY. I love to show that and point that out to people on SPY and be like, the only times in the history of the stock market that we have ever created lower lows is because of an anomaly. Who the hell could have predicted the housing crisis, and who the hell could have predicted some disease or what you call COVID, whatever, right? We couldn't have predicted that, but y'all see how it bounced back and really went. Why do y'all think that is? Because the informed investor said, oh shit, we just made a lower low on the market. I'm putting it all in. And what we just say, when we put it all in at the right time, when everyone's buying in, the price is gonna go. Y'all saw the 2 times that we made the lower lows is the longest pushes that we had. All right? They're all great pushes, but again, y'all see what I'm saying. So just buy them at the dips. So what do we want to look for when we're looking? Again, we went through this. Sometimes I hate going through the slides on these because I just know what I want to say. But we want to look for low debt. Duh. We want to see, can they increase dividend payouts? Because that means y'all really making money. If they're because remember, we want to look, are they increasing or decreasing? So if we see that they're decreasing dividend payouts, or did they just stop paying out dividends, period, it might be time for me to take profit on my shares for that company. It's not like I can't buy them back, right? Might be time for me to take profit. I don't have to take all the profit if I believe in the longevity of this company, right? But if I'm seeing that y'all can't do that little extra love, y'all probably don't got it like that. And so to use myself as a scenario again, shit, when y'all see me post a $320 webinar again for 6 weeks, it's because didn't have enough customers at $20. Got to raise it back up, right? And it's reverse in there. I know what I'm saying, but it's reverse. Or it might be, it could even be a case where, and this one, it was kind of slow grooving because I only really didn't post it that much. But like, let's say I actually do the marketing I should do. And I actually do it as I'm going to continue to do throughout the year. I kind of wanted to, ease my foot in to see how it would go. But let's say I do it and I post the schedule in March and 400 people end up signing up then. Because why? Because I'm going to do this. I'm going to put my all into it. so that you all feel as if you got a great return on your investment. And then all I'm gonna do is say, hey, give me a review and go post that, right? And that's gonna create the demand. You all just created the demand. Now I had to put it out there for people to see, but you all just created that demand for me. So March comes around and I have 400 people show up. Did I make a pretty penny? Of course I did. But I'd be a fool to not turn around in April and raise it to $30. It makes sense? Wherefore, me dropping my prices down to $20, you could look at it two different ways, right? You could look at it like it's my dividend payout because I invested in the market dip. I can increase my dividend payout to my investors, right? Or you could look at it as, oh shit, maybe she's not getting any business, which ain't true. Maybe she's not getting any business, so she had to do what? Lower the price to find buyers and then steadily raise the price back up. That's not it, because your girl did what I was supposed to do in a bear market. This my off year, so I have the ability to increase my quote unquote dividends and give back. All right, that makes sense to everybody? 1 for yes, 2 for no. Where y'all at? I feel like I'm giving y'all my all and y'all are so quiet. All right, so operating margins, same thing like that. So y'all can read the definition here, but to go with the example that we doing, right? My operating margins are low. So it's so easy for me to give back. People tell me all the time, like, oh no, you're doing too much. You're teaching too much in that class for what you did. But it's so easy for me to do it because my operating margins are low. All I got to pay for is Discord and AT&T internet. That's it, to run my business. And then engine, right? And then because I do my own marketing material, because can't nobody make me look good like how I can. Okay, I know how to throw that filter on there just the right way. No, I'm playing. Right. And then also most marketing social media managers end up quitting. I say they end up firing me because they be trying to get me to go in and do like classy professional reels. And I'd be like, but that's not me. It's not gonna work, which kind of goes into investing in that company, right? We don't want to invest in a company that we feel like faking the funk, putting on a show. We want to invest in a company that's, and I hope I don't sound no type of way to the people who don't know me, but y'all want to invest in, we want to see the face washing, okay? Y'all want to hear the shots, because y'all know I'm saying it in love and I'm saying it to be real and I'm giving you facts. I'm just shooting it straight. Couple jokes, a little sarcasm, but it's all facts. It's all straight shooting, right? That's what you want. But anyways, we got it. So new investors should start investing with index fund and ETFs. Okay. Buy the basket. It'll make it easier as you easing yourself into researching these companies. Buy the basket. For example, we could do SPY, VOO, DJI, all that stuff. Okay, so I wanted to go through this and actually do this, spend a little bit more time because y'all started talking to me a little bit more in there. But I want to pull up a chart and I want to show y'all. We're going to look at Eli Lilly. Actually, yeah, we're going to look at Eli Lilly. This is, remember again, I'm on the weekly. The W is for weekly. Sky, get that ball out my face and get out. Go to the crate, something, go. She keep coming in here, jumping on me, trying to get me to play fetch. Girl, no, it's dark outside and it snowed. Please, you gotta play with yourself. All right, so the weekly. Who feels like ain't no shame, ain't no shame, okay? Because also ain't no shame, okay? For real question. Yeah, wow. And I'm finna show y'all, I'm gonna have to shoot some shots. So to the innocent bystanders, I'm sorry for the stray that y'all finna catch. To my mentees, yeah, well, welcome to the lecture part of why I wanted y'all to come in here. All right, so yeah, get ready. Catherine already got the lecture. You finna get it the frick again. Yeah. All right, so Eli Lilly, put a 1 if you would be willing or are able to, right? I ain't gonna put you on blast. If you are willing or are able to buy 1 full share of Eli Lilly right now. at $618.55. Willing or able? Put a 1 for yes, a 2 for no. Everybody can answer. Thank you. I got it too. I feel like some of y'all lying. No shade, no tea. I feel like some of y'all lying. Yeah. Got some twos. Yeah. $618 in 2024 as a brand new investor, right? Now I'm not because of course I fully expect some people to say yes, right? Because I said able or willing, it could go either way. Yeah. I do fractional, but not full, right? We talked about that. Good job, Kendall. You can definitely buy fractional shares. Not all platforms allow you to buy fractional shares, right? There are some, so Webull is one. I'll write them right here. You got Webull. Doesn't Robinhood let you do fractional shares? I'm pretty sure. Fidelity, yeah. Okay, yeah. And Stash, we ain't even gonna, I'm gonna act like you didn't say that. All right, so these are the main three that are actually very, oh yeah, and Interactive Brokers. I'm gonna just put IB. These are good ones, and I would, I'm gonna rewrite them in order. You see me double clicking. I'm gonna rewrite these in order from best to worst. And it's a subjective opinion. They're all great. Ish. Okay, so I wouldn't bring them up, tell y'all the names of them if they weren't good. Subjective opinion, right? But in my opinion, that's about the order. Anyways, Eli Lilly, who knows? I ain't even gonna do it to y'all because I done had y'all on here too long. And that's something I'm working on. If I say it's an hour class, do an hour class, Alex. Call me Alexandria. I can call myself Alex. So if we look at the news on Eli Lilly, child, they cut the middleman out. They cut the middleman out. Who's excited for LaKenya's class? I think it's next week. Who's excited for LaKenya's class? Not enough of y'all went in and signed up for that, by the way. So make sure that you come to the events channel. Okay, because next Thursday, pharmaceutical deep dive from a Black female scientist. You sick if you're not there. You're sick if you're not there. Okay? Make sure y'all go and y'all click interested in that. And because it's one of my mentees that's coming in and willing to give back for the free skis, if you not on time, is locked, and don't message me and ask me to unlock it, because y'all ain't gonna play on my mentees' time. We not gonna do that. So what Eli Lilly ended up doing is a digital healthcare experience. Basically, they said, why would we, and honestly, actually, LaKenya, look at your phone, and you already know what I'm about to ask. So basically what they said was, we want to cut out the middleman. Like, why would we make the pill and then give it to Walmart or CVS or whatever to sell the pill, to give it to a pharmacy to sell the pill, when we can just have our own platform and sell it? We make it and sell it, keep it all in-house, all the money for us. That's what they decided to do. I'm gonna see if LaKenya look at her phone. We're gonna get there. We're gonna get there. Wife is in clinical trials and gonna be there too. Cool. We're gonna get there. Stick with me. Stick with me. I'm waiting on LaKenya to, let me make sure she's still on here. I thought I saw her. Okay, yeah, she's looking. Okay. So yes, that's what they did. And I'll kind of leave there. Great news came out about it. We'd be fools to not pay attention to our investments. Okay. So when we're looking at Eli Lilly, you kind of up here and you're looking, you're like, dang, it's at all-time high. So how do I buy something that's at all-time high? Well, Shawty, you missed your opportunity. Not even a year ago, right? Not even a year ago, you missed your opportunity. Eli Lilly, during the freaking bear market drop, was at $317. Okay, this is why you do what you got to do to buy a drop. All right, but regardless, so we're here. Good news that just came out. Good news just came out in all of this. And so something else that we want to pay attention to is what are analysts projecting that this price is going to get to. If we're on TradingView, you could simply Google these analysts. There's some nerds sitting in a garage and studying these companies and saying, this is what we think it is. Look right here, too easy. And this is a great website to use, TipRanks. Too easy, right? You could say, it's right here, strong buy. The highest analyst price target is $727, with the lowest being about $535 in a year. So the analysts give you their rating for what they project a price to be at for the next 12 months or fiscal year, we could say it like that, right? The average price target represents 14% increase from the current price. From the current freaking price is what the average price is about to be. Because again, you have to remember, all these companies do is figure out ways how to better themselves. The business 101 is you always looking for ways to preserve capital. Business 101. All right. So you could simply type it like that, or you can come on to TradingView. And what I did is I clicked over here on the side. It's multiple ways you could do it, but the multiple ways that we could sit here and do it, right? We could, and we talked about it. I'm sorry. So you want to click here, the little book piece of paper thingy, and we scroll down. This is some stuff we can look at. Look, it's telling us how much this company is worth. Do they pay dividends? How much is it traded? Because remember, the typical volume is about 2.4 million a day. And volume is telling us how many trades happen in a day, right? On average, it's about 2.4 million. In the last 30 days, the average volume has been higher. It's been 3 million in the last 30 days. What we just go over. When something you're going to see an increase in trading and volume before it happens. That was a sign right there of, Eli Lilly got something coming on. So Eli Lilly got something coming. So if we just, first thing I believe you should absolutely be doing is draw your trend line. Draw your trend line. And look how since March 2023, it told you every single time that it was at a low. It told you. And, if you had your trend line like right here, but when it made this in here, you could even have your trend line right there. And again, it still told you. This is pulling back. It's making a low to then go up and make higher highs. Oh my goodness. In my opinion, we'll see what happens. Eli Lilly is about to pull back one more time. Eli Lilly has one more good pullback left in it. And if this might be a little over sums, but if y'all look, if we're just looking at this from when it was a new market, right? And we honestly, this is really what I want to show y'all right here. What chart pattern is that, my babies? What chart pattern is this since August 2023? What are we looking at? Hell no. So that's why I widened it. That's why I widened it to this. So I said from here, from these trend lines, what chart pattern is this? We got equal highs. We're just gonna go on and say equal highs, right? Because honestly, really and truly, I could really put it here and see that these made ascending triangle. There you go. We got the equal highs, higher lows. This is an ascending triangle getting ready to break. And we can see what's happening in here and see how this volume was lower today. That's a bull trap. This is gonna push down to this trend line again. This is gonna push down again. And if I'm looking here at about the price range it would be, that'd be about 574. What did we just read? The average price was gonna be? Well then, okay. Something that you wanna look at there. Now, in July 2023, again, I apologize to my new people for these strays y'all finna catch. In July 2023, I screamed from the rooftops quite a bit for quite a while. We're about to get an Eli Lilly. I see what I see. And when I tell y'all to get in Eli Lilly, buy what I buy and don't sell it. So in July, and I'll jump to it, what made me start looking at this company was that news came out about Eli Lilly that they were on the road to, I'm not gonna be saying it right, but y'all gonna feel me. It's layman's terms. I'm not a scientist. They was on the road to curing diabetes. But on top of that, they was already trying to come up with a drug for weight loss. And on top of that, they was doing something else, a third one, weight loss, diabetes. Like, can you help me out? I forgot the third one. Something else, right? It was just hitting the scanners. The volume kept popping off. Like the volume was, it was just like so much trading. You kept seeing it pop off. You kept seeing it in the news. They had earnings coming up. Said, I see what I see. While it's selling off, we're going to get into a swing trade and we're going to hold this because when this news comes out that a company is literally on the verge to curing diabetes, what the fuck did y'all think investors was going to do when that report came out? All right. When we bought those contracts, if we look here, this is the first time that I said, I guess I get in September. And we'll look at September, I got us back in and we bought it for 2024, right? Y'all see what this is? Literally said, we could even go back. I mean, you could just see when I was talking about it, started talking about it, started bringing it up, saying, y'all, something going on with Eli Lilly. And then DC started telling us about the healthcare, just all of this stuff. You can see the headlines coming out. Oh, Alzheimer's, that's what it was. Alzheimer's, diabetes, and weight loss. All at once? What? That's an investment. That's gonna get your money and you get into it. Okay? So at the time when we were in it, we got in, people got scared. Y'all see them asking me, are we still holding? Leave me alone. I told you. We go back and we look and again, you see it here in August. I'm like, please tell me y'all held this. I'm scared. And then this is the day when it just took off. I don't think I have it in gains anymore. I'm talking about the earnings report released. All everybody was talking about was the Alzheimer's, the weight loss, the diabetes. Okay. We woke up this morning. It was on this morning. Your child trade for what? Y'all see what they talking about? They in here talking about, yes, Eli, all this stuff. I had to scroll down. $40 move on Eli Lilly. There it goes. It took off. I'm talking about, I think a few of y'all are in here and one of y'all are still in that position with me. So the Greeks generate So the geeks generate numbers from tech. Yeah, I kind of said that offhanded, but they look at it. In favorable PH phase 3 results the day before earnings. Exactly. Thank you. Knew I wasn't gonna say that right. Okay. When the hell did this come back down? Y'all, I'm up 7,000% on that trade. So when I fucking tell y'all to get back in Eli Lilly in the next couple weeks, get the fuck in Eli Lilly and don't sell it. Jesus Christ. Not these people figured out how to cut out the middleman. Am I gonna have to repeat myself? Like, serious, I'm so serious. Am I gonna have to repeat myself? Or when I post in there and I say, get in Eli Lilly, will we be getting in Eli Lilly together? I'm just trying to see because I don't want to waste my breath again. I'll keep it to myself. I'm just freaking wondering. Again, I'm sorry to my others who are in here who are not y'all answering too. Not the others answering or my newer, not y'all answering too. I told y'all was finna catch some strays to my mentees on here because I'm so fucking sick of making money by myself. Because for one, y'all not helping me with marketing material. Okay. I dead ass tell y'all to play. Break it down, spend it in class with you, steady tell you, you need to buy this, you need to buy this, you need to buy this. Fucking do it this time. This company is not going anywhere and you just saw how far it was finna go. Sorry to everyone else. I promise I'm actually like a really sweet person too, if you listen. The first time. Okay. So we'll leave off looking at one more spot. What is, they also did that in part to get around doctors that don't agree with overweight people taking the quick fix and refusing to prescribe. So like, like Ozempic, because people can go to like a little day spa and get Ozempic, which is not helpful to the people who actually need Ozempic, right? Am I on theme? You can turn your mic on if you want. I'm finna click it. If you want, you totally do not have to. You do not have to. But I'm finna I'll do it if you want, but thank you for correcting me and helping me say it better. Sound like my mom. I just told somebody earlier that all of my mentees are at least 10 to 15 years older than I am. A majority. I'm only 32, but I don't know. I just don't play. But what is something that's going on in the world? What's some stuff that's going on in the world right now where it's just like all you hear about? Like, what's the type of industry or sector or any, something like that that's like, we just know it's taking off right now? Like, we already talked about defense, like war, right? But like, what's something in the world that's changing around us? AI, tech. Let's go. Y'all so black and intelligent. Let's go. Love it. Okay. So for technology to work, what do we need? What do we need? Crypto, period. What do we, for my phones, for technology, let me see, how do I want to write it? In order for me to order a new bed, like a new bedroom set, bedroom suite, whatever, in order for me to get a new bed and a couple dressers, what company do I have to use in order to get that done? And I'm gonna do it online, not go in store. What companies do I have to use in order for me to order a new bedroom set? A firm, girl, I got it like that. Amazon, period. I could be ordering it on Amazon. PayPal, let's say PayPal, okay? Wayfair. Okay, but how do I get on Amazon? What company do I need in order to get on Amazon to order it? Cool. An internet company, or I have to get on the internet. So like Google or what's Microsoft's Google? Chrome. Is that Microsoft Chrome? No, that's Google. Wait, what? Whatever. One of those, right? Edge, right, period. Okay, but in order for me to get on the internet, for that to even be possible, what company do I need? Yeah, electricity, period. Wi-Fi, there we go. AT&T, Verizon, I need some Wi-Fi. Comcast, whoever is your internet provider, right? Okay, so y'all telling me in order to, but y'all missing one big thing. So y'all telling me in order for me to order my bedroom set, I need the platform to order it off of, so Amazon, Shopify, Wayfair, whatever, right? And y'all told me that I need to be able to get on Google to do it. And y'all told me in order to get on Google, I need the internet, I need Wi-Fi, computers, a phone. So we're looking at Apple, maybe even Verizon, you know, some other phone companies out there, but we'll just stick with Apple, right? But in order for my phone to work, what do I need? Microchips. In order for the microchip to work, Kendall, stick with me. I ain't said nothing about the company. So you killed it on HUD. Hey, y'all be fucking sleeping on me. Thank you, Miss Eva. Look, but look at you talking about aim. I'm gonna get there, but period. Yes. So okay, so semiconductors. Semiconductors don't just come out of nowhere. I gotta find the semiconductor. Like who helps make the semiconductors? You know what I'm saying? So you see how you can sit there and just break it down and be like, I'm still here, obviously, but you see how you can sit there and just break it down to figure out, what am I doing? To figure out what you wanna, like, what is a company that's a necessity? If it's a necessity, it's not gonna go nowhere. What company bills, I'm still here, y'all. Oops, let me see how I wanna word it. Give me 5 minutes. I promise we're gonna be done at 7:45. I promise. Less than 15 minutes. I promise. I know it's a Friday night. Who saw the last reel that I put up about ChatGPT? How I looked up how I got on ChatGPT and used it to help explain a company to me in layman's terms. Y'all didn't see that on Instagram? Me, I saw it. Okay, cool. All right, I'm finished sharing my screen again. Now look how you can do that in reverse. We just broke down the supply chain. We know where the world is going. We know that's going to be popping. Look how you could do that in reverse, because this is how I started. What company manufactures equipment for semiconductors? Oh shit, look at the first one. ASML. All of these, right? Now, all of these are not, we cannot publicly trade them. So then look which one of those companies are publicly traded? Ah, that was so easy. Oh my God. Oh my God. Which one of those companies has the highest revenue? Hey, oh my God, did she wash her face and tell us that? And all she had to do was ask 3 questions, say enough said, and then go pull up the chart? And then looked at the chart and looked at the financial metrics and typed a couple questions into Google and figured it the frick out? I need to invest at the top of the supply chain. And y'all know what we like to look at. What I just said, we want to come over here. It's currently $149. We look at the analyst rating. It's supposed to hit $190 within the year. Huh. Now, was that hard? Who thought that was, who was like, damn, that was kind of easy? Did anybody have that thought? Did anybody just have that thought? 1 or 2? It's okay if you said 2. Because just come back for part 2, right? The question was just simply, can you repeat the 3 questions? Oh, they right here, what we just typed in. The first one I asked is, because we just broke down the supply chain of AI, how I can even use AI and all that. I said, what company manufactures equipment for semiconductors? Full list. Then I said, because I don't want to go research all them companies right there. So then I said, which one of those companies are publicly traded? They not all are. Cool, you told me right there. Then I said, which one of these companies has the highest revenue? I want to go with the filthiest riches. Oh my God, it's AMAT. Only one person answered that. I'm really asking, did anybody have a thought that said, wow, that was actually very easy to do, to get started? You could put a 2 if not. Because like I said, come back for part 2 next week. Mentees, I'm showing y'all a new method on how to invest. Hello, thank you. Or not invest, but y'all know what I'm saying. Do you make it easy? It is literally, and so here's the thing, y'all. If y'all look over here where it just kind of clicked in my head one day, where not one day, but you know, not too long ago, I come on Chat GPT for everything. Everything. I'll even like type in a question and tell it to give me talking points for like my reels real quick, right? Because I tend to get on there and most of the time I have to delete what I say because I'd be like, you know what? That might be a little too harsh. Right? Like I'll look at stuff like this. Or yeah, and it hit me, I said, damn, this really is going somewhere. Or I'll even do this so I can get content ideas. What are the top 5 Googled questions that minority and new traders and investors ask? This is what y'all been Googling the most? Bet, let me create content and classes to go answer y'all's questions directly, right? And the fact that I'm able to do that and monetize off AI, listen to what I'm saying. The fact that I am now able to monetize off AI, something that just came around a year ago, is something I need to be paying attention to. And I need to break it down. Right? And maybe you might even want to be looking at what company created ChatGPT and are they publicly traded? And then we have our methods of what we can do. Because I'm pretty sure y'all want to buy a stock that is currently 149, that is supposed to hit 190. And then keep going. That's just this year, right? And so look, this is how simple I keep it for myself. I've done the work. I know that this isn't this very basic introductory class, right? I've done the work. I understand that it's a good company. I posted it just last week. And it was too simple. I said, y'all, this it. Of course, we should, expect a little pullback. We got a support level in here. I said, when it hits your trend line, and y'all see my alert right there. When it hits my trend line, it made a low. You need to buy. And when it loses the trend line, you need to buy more. Or if, right? Because it won't always lose the trend line, but you need to buy more. So you don't just go balls to the walls when you first find it, right? I'm not gonna sit here and buy 50 shares of this when I first looked at it, right? I'm gonna start easing into my position because I understand that I don't know where this is gonna drop. I know where this is gonna go, where it's projected to go. I don't know how far down it's gonna drop. I can look at technical analysis and assume that it'll drop somewhere to about 144, which I think that's what they said is the average price that it'll be at for the year, right? The average about 167. So look, it's lit. I'm understanding that I'm starting my position. Now, I had no clue that the next day it was going to continue to drop down, right? Although volume gave me a great indication that it would. That huge spike in volume gave me a great indication it would. But I could make the assumption it'll stop here around there. But if it dips down even lower than that, guess what? I'm just going to buy more. I'm hoping it'll stop right there. Okay. But I'm probably not going to buy any more until I see the price get down here. Right. And then I'll buy some there with the thought process that it should hold right here. But if it drops below here, I'm going to wait it out until it hits this. This is my 200 moving average. And I'm going to buy some freaking more. Because again, look, we just did the work. We just did the work. And well, looking into their financial metrics as well. But something I want to point out is this drop right here, or if you know, is a bull flag setup. And the narrower the channel, the flag is, the more we can believe that like it's gonna run. The wider or not run, because of course but I could say it more so like the narrower the flag is, how am I saying that? It shouldn't be in this flag for as long as if it was like a wider bull flag, like the Lord, see, it's time for me to go. But like if this was wider and it was more like this, it's gonna take longer, right? Because you got to come all the way up here, all the way down, all the way up here, all the way down. The fact that this is a narrower channel gives us like the perception that yeah, this not gonna, again, it should probably hit here, pull back and then keep going. Do you think it's foolish to sell Apple and buy more Microsoft? We'll talk about that in your class. I think it'd be foolish to sell Apple, because where is Apple gonna go? Right? The name of the game is hold it until your grandchildren can own it. But we'll talk in your class. Do I think it would be foolish to not buy Microsoft? Yes. Okay, so that is hold on one second. I'm still here, y'all. Hold on one second. Let me see. Sandra, she's in here. The Zoom link, I'm trouble accessing class using the link provided. All right. But that's what I have. How do y'all feel? How do y'all feel today? Y'all feel like y'all learned anything? One or two? Okay, period. Thank you. I appreciate that, you guys. I'm so glad y'all feel like y'all learned something. Bye, 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 bye. It's not that difficult. Research, research, research. It's not that difficult. Ask questions if you need help. And I'll see y'all. I can't remember when the next class is, but come back for part 2 and you will get the recording like Monday. It's Friday night. Don't even email and ask. Monday. My new phrase is if the bank is closed, so am I. Okay. Have a great night, you guys. I love y'all and thank y'all for the continuous support. Scott, stop licking my foot and get out of my face. You know what? It's time for me to go. I love y'all to death. Have a good evening, y'all. Shakira, you're probably gonna get a phone call from a Texas number coming soon. Bye.